The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, welcome to TFNN, to the Tiger Technicians Hour, and my pleasure to be here Monday, Wednesday, Friday, 11 o'clock until noon. Today being July the 23rd. Wow, July's finished, another month and a quarter of summer, and then here in Boston it's all over. Well, we still have nice weather, but actual summer itself gets cool very quickly. Well, a great weekend the past couple of days have been really good. Now, thank you, Steve and Tom, for 2 great hours. And, of course, straight after me, you get Larry Pesavento. And it should be another great hour there. So we've got a full program. We've got Dave White. You've got Ken Shreve. You've got Tom O'Brien. Wraps it up at 4 o'clock till 6. We have programming here for 9 hours, and it's continuous. And it's just it's a pleasure to be here. So let's go straight to the markets. The selling that was very intense at the opening today, that took the Dow below the 1600 level. I think 12,600 level. And for me, that is quite important. The fact that it went there, getting closer to the 200-period exponential moving average of 12,530. Let me just do this with my charts. Actually, you know what I should do? Should I do it now? Yeah, let me do this. I'm going to go through all the numbers right this moment, and then I want to do something a little different. The Dow is down 132 at 12,689. The comp index is down 54 at 2871. S&P is down 20 at 1342. Got bonds up. Now, bonds were up way sharper than that earlier on. Now they're only up a half a point, and I'm going to get to that in a moment. Crude oil is down almost 3 points at 88.98. And gold is down 7 at 1575, and silver's down 29 at 27. Now, high-grade copper has been just trying its best to hold, and it's not. And that's telling me that we are looking at an international weakness. I'm not talking recession or anything, I don't know. But definitely if copper keeps pulling back like this, it's international weakness. Now, that's not the issue. The issue is I want to go to some charts. First of all, for my subscribers, every day, I show the overview and market today section, and that has, I wonder if I've still got it. No, I don't. And that is a very deep analysis of the 120-minute chart based on the ChapmanWave of the Dow, went to a peak E, doji top at 12,977, plunged through the 200-period moving average. On that chart, it's 12,691, went down to 12,583. There are signs on a very short-term basis that there's an attempt here to find support. All those money managers who did not get out of those stocks that plunged Thursday and Friday and today, they're waiting for a rebound to say, hey, is this a time to be adding, or is this a time to try to get those stocks as high as possible so that we can get out of them at a better price? I'll talk about that if I have a chance a little later on. That's kind of a tertiary aspect. What's really important is the volatility index. You know, I've been talking about the volatility under 20. Now, these are not numbers you'll find in any book. You won't even find it in Richard Arms. These are numbers that I've developed over the years. It used to be, over the years, the parameters changed slightly. So I've made 20 for a long time, the level where under 20 there is buying support. Over 20, you've got to be real careful if it holds. That is holding over 20 in the VIX, the volatility index. Today it went to 20.41, an almost immediate spike up. I happen not to like that. I find that very bullish. I'm only talking 120 minutes. Remember, I'm not talking overall. I'm talking about the 120-minute chart. So on a 120-minute basis, I find that very bullish. I also have been pointed out on Friday, and I pointed out to my subscribers in great detail that I have an index that I've developed. It's called the Trin Gauge. It's really Richard Arms' index. I shouldn't claim it as my index at all. My parameters are my parameters. And I had a reading, and I mentioned this on Friday, that said that within 1 to 3 days, this is a different index reading than if it's on the downside to a very low reading. When it's very high, it says that within 1 to 3 sessions, that is day sessions, because that's a daily chart I'm looking at, there should be a rebound. It doesn't say there's been a trend reversal It could turn into a trend reversal. I need other aspects for it. But it says be careful. There could be as much as a 6 to an 8 point S&P upside reversal. And we might be seeing that right now because the S&P futures this morning, let me just go to this chart, hit 1332, and now we're at 1340. I would say that that's 8 points. Yep, that's 8 points right there. Actually, it's now 13 points. So in that aspect, in a sense, it's kind of worked. It's a little magic, and we'll see if it's able to sustain this move. Now, holding back in these charts, look, when you see an up channel, at least as I draw it, and you see I'm going to do this right here. I'm changing the color. This is what I would do at the end of the day. I usually don't like to do it during the day, but because the price is not yet. If you're looking at a daily bar, you really have to wait for the end of the day. But I can still put this in because the parameters are the parameters. You will see that the Dow went right to the support of the trend line that I have been drawing for my subscribers for a long time. And that went right to today's low of 12,583. And we've rebounded. And the level to really rebound above and hold on a close would be 12,700. If the Dow closes above 12,700, in a sense, it's gone into the buy zone. That's this ChapmanWave buy zone that I always talk about. And it's held support. And all one would have to do is put a stop. You can even put it 10 points below the low of the day if you wanted to treat this as a rally that you wanted to actually trade. I happen to be thinking that I don't want to change my mindset. My mindset for some time has been on the short side. We only have short positions. I can't believe we only have short positions. There are some very nice looking stocks, but I wanted to focus on the greater tide. And the greater tide has, I think we have 5 short positions. We've never had that. One we got taken out of for a fabulous profit on Friday, and I had said to subscribers, if you want to hold just 2 or 3 of these shares, if you have enough, hold them into Monday. And today I said get out of those at a certain price, and that's just that was a very nice trade. Now, look at the S&P. The S&P's done exactly that. There's a rising trend line. You know what? No matter what you're thinking, right at this particular point, that's not 4 o'clock today, but at this particular point, you have to say that the up channel has held intact. If the Dow, I keep doing that. If the Dow closes underneath 12,560 in the next 2 days, then we've got some far more serious, and you'll see that volatility index, which is now at 19.03. But it closed on Friday at 16.27. Today it went 4 points. That's 20%. So that's an incredible move. So you can expect that that's an indicator that has worked, telling us a story, and keep your eye on it. So those are the levels to watch. S&P cracks underneath, closes underneath 1335, 1337.56 was the low. In the next 2 days, very poor action. Test the 1325s very quickly. Dow will test the 1342 level, left side low bar, very quickly. All right, I now want to get rid of this, and every day my subscribers get this whole thing, the detail of the Dow diamonds, what we're looking at, the Dow Industrial. Now I'm going to just shut this down for the moment because we don't need it. And I do want to, 877-927-6648 is the number to call. I'll be taking callers in a moment. Let me just get rid of this. And I want to go to the charts that I set up for my subscribers, because I just, over the years, I've had so many people requesting, could you just have a couple of charts? Well, every day I show the one Dow chart, the 2 Dow charts, the diamonds, and the Dow in white background for printing. But, you know, I've done so much in TradeStation with the black background, and I see it so easy going to the white charts. I'm having to relearn some of the things. However, I did a lot of work because I know that people really do enjoy looking at the white charts. Look, here it is. The left chart, if you're looking at if you're looking at Tiger TV, you'll see it exactly here. The left chart is the daily chart. You see this very big arch formation that's unfolding. That's real simple. In the next week and a half, Dow goes over 13,100, 13,200. That's very good action, and we're going higher. However, if the last peak E doji top that was made on Thursday at 12,977 starts to see a crack of that 12,500 support, and then 12,492.25 was the low on the 12th of July, you've got to be careful because the stochastic's way low. It's at 78% than it was at peak D just 3 weeks ago. What was it, on the 3rd of July? And the MACD is lower, but MACD has not yet crossed negative. So that's the daily. Now comes the weekly chart, and the weekly chart says, there's a pattern that I always talk about, and in my study book, Introducing the ChapmanWave Methodology, only available at TFNN, you'll see I talk about the right shoulder failure that turns into a dreaded H and retests the lower left side low, in this case at 12,035 low of the week of the 8th of June, and you are going much lower in another arch formation. And look, the MACD is about to deflect low. It hasn't been able to cross positive. So stochastic in the weekly is only at 57%. Now I go to the third chart on the right, and that is the weekly. And you'll see we've essentially made 14,198 was the high in October of 2007. 6,469 was the low in March of 2009. We went up to peak E. We went up to leg E, made a peak E at the 12,009. What was it? 13,297 level. Now, what we've got is a very interesting phenomenon, because that 9-period exponential moving average this week, if there is a close underneath about where we are now, 12,680, there's a close below it, especially if it's a decisively strong one that really just powers into Friday's close into the 12,300s or so. Then what I'm looking at is a stochastic that's at 82% and is bound to go underneath 80%, and the MACD will cross negatively. And you can see that the prices that were reached on this last peak are lower than they were at the peak D top back in April of last year, March, April of last year. So I wanted to go through those and show you the charts on I haven't finished this one, going through all the notation. Everything's done by hand. Now, what can I say? It's just the way it is. Now let's go to bonds. I'm going to the continuous contract. And in the continuous contract today, we made leg, 152 and 7/30 seconds, 152 and 28/30 seconds. This is the continuous contract. We are in leg D. I had to wait so long for leg D in the weekly contract. That is interesting. Why? Because from leg D, you know the song that I have, I'll go through it a little later on, but it basically says when you get to peak D, flashes a cautionary light. Well, this is that cautionary light that says bonds are holding really well. MACD's not as strong as it was back in October of last year, but still strong and rising. And the stochastic is strong at 89%. So the weekly chart is still very positive, and that monthly chart, which we'll talk about in a moment, that's going to be the interesting thing that we're looking at. Look at that channel. I especially did it in white, so if you want to print this out, I'm giving you permission. Click and paste. I'll be right back, Basil Chapman, Tiger Technicians Hour, and we'll be back with Michael in New York. Be right back. 877-927.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, 877-927-6648. And we have on the line Michael in New York. Hi, Michael. How are you?
Good. How are you?
I'm very well, thank you.
I have a little dilemma.
What's the dilemma?
I'm not sure whether I want to go short Under Armour, UA, or Panera Bread. Both report earnings tomorrow. On Under Armour, I'm afraid that it might be just in a leg B on the daily.
All right, let's just go through that.
I want to get your thoughts on this.
Okay, this is, as far as I'm concerned, I have not certainty, but I have a great deal of information about Panera that says the upside on Panera is extremely limited. It might try to fill the gap on sudden up spike to 147. PNRA is the symbol. It's Panera Bread trading at 142.25, down 272. There's a gap from the peak D high that it made on the 19th of July at 151.78. I hunted this thing for round numbers. I didn't see any right here. But what's interesting is in the, let me just double check. Yes, in the top that it made at 165.99 peak E in the ChapmanWave was absolutely, it's so interesting. The very next day, I had a round number at 160.00, and that was the low. So the day after it made a high, it had a round number at 160. What I have as a rule of thumb is, first of all, this is a particular pattern that I teach about. It has to do with dojis, it has to do with round numbers, and it has to do with a factor that I throw in there called the silent round number or the silent doji. Now, what's really important about this is that 160 became the level to watch constantly, because as soon as it decisively broke under it, and that was back in April of this year, when it slumped down to 147, when it rallied back up again, it had a round number 158, went to a peak B minus because it failed soon after that, but the very next day it opened at a round number 160, and I marked those as keys because at that point, if you had shorted, all you needed to do was put a stop above 160.00. At 160.01, that would have been a perfect stop. Then you could have used 158. Now, I'll hunt around and see if there's another series of round numbers. Near the top, no, I don't see any. Okay, so I have to use a different technique. Basically, what's happened, Panera, if you look at it on, not the daily chart made a peak D in this last move up, has pulled back. The MACD hasn't crossed negatively yet. When's the earnings? Tomorrow afternoon?
Yes.
Okay. As far as I'm concerned, there's a dreaded H that is turning into an M formation. If there is a rally, it needs to close above 158.98. Let's call it 153. It needs to close above 153 in the weekly chart for me to even get a sense that there's a trend change unfolding. What I'm really looking at is that the weekly chart has this pattern we've seen before. It has a long-term uptrend. It made two rallies that are buy modes from a low bar, and the low bar would have been back in at 30.60 back in January of 2008. Went to a peak D. That was in April of 2010, folks. All peak Ds is 4 higher peaks. This is completely different to what many here at TFN use. The A to B is equal C to D. It's got nothing to do with it. All I'm doing is I'm identifying the lowest low bar, just as the daily chart went from 135.40 on the 26th or 28th of June to 4 peaks higher, to the, especially with the doji top. That's your clue that there's a problem on the 19th of July, and then on Friday gap down. So I'm looking at this, and I think that Panera, based on my monthly chart, has gone above the up channel. It's gone into the up channel. It's broken the mid-channel trend line. It is heading towards the buy zone, which is really just a support zone if it doesn't hold, and that has a target. Then I would say Panera at 142. I've got a target for Panera of one. Well, it depends when it is. Of 126 to 124, and I suspect that that's going to happen by mid-August. So that's the way I'm looking at it, regardless of the. Now, if it comes out with earnings and it gaps down, here's my recommendation. If it rallies, if Panera Bread rallies towards, is at 142.06. If it rallies towards 144 to 145, start a small position on Panera as a short, and you're going to have give it a little bit of room. I don't think it's going to gap to the 149 low of the 19th. So you know what? You've got two stocks there. I'd like to cover them because they fit right into the apparel area and food area, restaurant area. Hold on, I'll be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow is down 134, S&P's down 18 points still. Good rally attempt, and my suspicion is that there are just so many fund managers and hedge funds that kind of missed the decline that they're just stunned. And there's a desire to see a rally here to be able to make some decent decisions. Nobody wants to sell at the lows, even if it's going to go lower. And that's, I mean, on Friday I was trying to put myself into a fund manager's mind saying, well, at about 3 o'clock saying, what would I do right now? What? And absolutely I thought, if the market opens sharply lower on Friday, on Monday, and then has an intraday bounce, by about 12 during my show, as we go into the close of my show, we should have a tremendous amount of information about which stocks have the potential to bounce stronger, which sectors are now starting to hold and show that they still have leadership positions, let's call it positions, and that's in the home builders, construction, etc. Can they sustain this rally? Are they just holding up because they've just been the best so far, or is there real buying involved? We're going to tell a lot, and I'll go through that right at the end of the show. Meantime, we've got a wonderful caller, Michael from New York, who usually gets these things very, very well positioned in terms of his trading, and I think he's got a good eye. He's looking at UA, which is Under Armour, but the monthly chart has not yet given me any signal other than it's testing the 9-period exponential moving average, which it has done previously, but it's not closed below it and, since it broke above it back in March of 2010. So, the weekly has the potential for this oval pattern. There's the potential, I say. I actually believe it's going to happen to spike one time to a higher high above the 53.93. Oh, man, 10 points in this market. I don't see how it can do it. Now, I did see a number of people over the weekend, especially at the beach, wearing UA. I saw Under Armour. I know you should go around looking for it, but I know that Michael had brought it up, so it was on my mind. This is the way I'm looking at it. Now, do you have a position at all in either of these? You were a little bit short at one, the
very
UA.
small. I mean, they're minuscule positions, but so it's. I really haven't made a commitment.
Okay, then it's very easy as far as I'm concerned. The Panera Bread one, I know that you look out longer term and you are prepared to place positions at certain points and certain times. Let's deal with that one right now. Panera, as far as I can see, no matter what they say, I don't know how they can come out and say that things are going to look great for the next quarter, because commodity prices even if it doesn't impact them the next couple of months, by the end of the third quarter, that's where we go: January, February, March, April, May, June, July, August, September. By the end of September, beginning of October, there's going to be that fear, because these prices this is serious stuff. So I suspect that the going short a position in Panera makes sense, and I would do it. This is the way I would do it. You've got a trade on right now. I would put another trade on at 140, it's at 140.168. I put another trade on at 145, between 145 and 146, and I'd have just the tiniest trade at 147.50, just in case tomorrow there's just a big spike. Maybe the market moves up, maybe, whatever it is. Tell you why. The trend line resistance in the weekly chart is just so strong, and has been so strong in the this is this week right now, so in the 149 to 150 area. I just don't see it closing above that unless there's some spectacular news. And you can imagine what kind of spectacular news can they give when there's so much uncertainty out here. I'm very comfortable in saying that with the Panera. The UA one is, let's hope that there's a spike to the upside on Wednesday morning, because if there is a spike to the upside, I probably would, during my show, if you call, I probably will suggest, depending on how it goes into the gap above 51.13, if it does get there, 51, can't be 51, 51.13, I might suggest that that's the place to start putting on some shorts. So I hope that helps you.
Yeah, good advice. Thank you.
Thank you very much for calling. So, folks, the Dow's down 157. Now, this is what I wanted to do. I wanted to go through certain things, and I wanted to show you a chart. I'm going to be giving more of these charts out to my subscribers now that I've finally taken the time. It takes a lot of time. It takes me no time at all, just maybe 5 minutes or so to do each daily, weekly, monthly, going back to the very beginning of time on each of the charts. But it does take me a lot of time to do it on all the charts. I'm not going to be able to do all the charts. I'm doing only key charts. Look at the IWM. The IWM, you see this blue line? You see the blue line, or cyan, this light blue, at peak D on the week of the 6th of May, 12, that should be, of this year. And you see the yellow line down? The failure pattern, the dreaded H, or the right shoulder failure pattern in the Chapman wave. You see the technicals below it? Look. March of this year, the week of March the 30th. Why did I write that? That's because I've got the computer I was writing on is a new computer, and the keyboard is, I'm a musician, so my fingers are trained to do certain things. But my keyboard is one letter away, and I keep typing in a 2 instead of a 1 and a 3 instead of a 2. So I must change. I'll do it right now because this is the best time. Otherwise, I'll forget. There we go. Okay. Now look at this. And now, of course, that's 5. What did I say it was? 5, 5, 6, 11. Gosh, that was a big mistake. 5, 6, 11. And this is 3, 30, 12. 3, 30. What I'm doing is I'm retyping, that's all. Okay. Now, if you're looking at Tiger TV, yep, you can see it. I'm just looking at my cell phone. I've got, yep, everything's there. Beautiful. Oh, you know, we have capability here at TFNN. They've put together, Tom and Ryan and the crew have put together just unbelievable technology. Look at this. I'm going to stretch it out so that you can really see it. This is a weekly chart of the IWM. I'm scrolling back from this trough D at 34.26. That wasn't the low. Yep, that was the low back in March of 2009. You go peak A, B, C, D to 62.61. You pull back. A, B, C, D, 74.66. You pull back. You find me any other technique that has this kind of consistency, and I'll say congratulations. You go to the low of the 9th of 2010 at 58.66. You go A, B, C, D. ChapmanWave flat base restart. This is what's called the complex ChapmanWave flat base restart that I teach in my seminars and my webinars. And it goes to another peak D on the week of the 6th of May in 2011 at 86.82. That gives you the cyan line. This particular technique says you will come back. And not you, but the price will come back. Not only will it retest the low, but it's probably going to break the low. If it breaks the low decisively, it can give you a 1-to-1 expansion to the downside. Goes to 86.82, pulls back, rallies, fails at a peak A-. That is the ChapmanWave right shoulder failure, and that usually leads to the dreaded H, that lowercase h failure pattern underneath 77.23. This is the Russell 2000 index, the iShares. Plummets below, and it goes all the way where? To the left side, right side, price time match with an inside wedge. This is another technique that I teach. The low of 58.80 back in the low of the week of the 27th of August in the Russell 2000. That gets tested with a successful test at 60.09 the week of the 7th of October. And where does it go to? It goes to peak A, B, C, D, pulls back, but the MACD is not ready to turn down yet. So there's a price rally to a new recovery high. Underneath the 86.82 of May of 2011, it goes to 84.66, cyan color. Pulls back, makes a little peak A failure. Then it has a bigger rally to this last A-, which is has all the signs of a failure pattern. Where question trigger, Basil, where is the last B on the pullback? Good point. That should be a good point. Good point. Well, I got good eyes out there. Folks, the Tiger Den is such a valuable resource. It's just terrific. Folks there, especially those who know the ChapmanWave, remind me about things all the time. That is a B. For some reason, I thought that was 74.49, 74.41. Absolutely correct. That is B. It rallies, goes underneath the 9-period exponential moving average today. There's the yellow line. I don't know if it's going to copy the same pattern that it had before with the arch formation that fails. Everything about it has a similarity. The MACD is deflecting lower. That's not a good sign. Remember, deflecting lower. And the stochastic's only at 62%. Now, what's important is that this line here, the 20-period moving average, this is the, I've got so many things going on here. That's the 50-period moving average. That 50-period moving average, it went under it, and we'll see if it's going to close above it. But in the meantime, everything so far looks like it's matching pretty well the last rally and failure back in 2011, but it's a weekly chart. I'm only saying first 2 hours of the first week of this particular pattern. I'm not going to make any predictions other than to say if the IWM takes out 75.42. It's not too far down. That is at 77.45 is where we're at right now. If it takes it out on Friday, this Friday at 4 o'clock, that's not a good sign. It says that it's matching very well. There's a good chance it's going to go down to the 72 to 71, 77 level where the 200-period exponential moving average is. we'll see what happens. So I wanted to show these charts. This is a printable. Just wanted to do that. Now on the daily chart, look what's happened. On the daily chart, there were three fighting chart patterns. This one's going to be, actually, you know what? I'm going back to my dark charts. The black charts, it's just easier for me to see. Oh, and look at this. Yes, the E-minis. There's a left side, right side price time match. Plop. It went right through the 1339.25 level. That is going to be the resistance going up to 1345 in the E-minis today. So on the way to our patterns. There we go. So now what we were looking at is we're looking at the IWM on the daily basis. Now this is very interesting because I've got chart patterns that say there was an up channel that today got pierced, but the day's not finished because it's still closed at least above the 200 period moving average at 77.75. Let me see if I can get that a little clearer. There you are. The peak D doji chop at 81.84. I think I typed that in. I'll do it again. 81.84. Hey, that's very important. Oh, change color. Oh boy, that's the trouble with these charts. If you go to different backgrounds, I'm going to keep changing color. That says there's been a dreaded H failure pattern so far today. If it closes above the low of 77.59, that's the low of the 12th of July, that's a positive and says you could rally, but the maximum you could rally is probably to the 200 period moving average at 79.13, and then you're going to turn down again. If it closes decidedly low, it says any rally will be very brief and you're probably going to go even lower. And that says if it goes lower than the level to watch is 76.12. That's the IWM. What if there is a tremendous rally at the end of the day? This news overseas, whatever it is. Well, I would say that the up channel support is now resistance, and there again, it's the same thing. You've got that 78 to 79, very strong resistance on IWM. If it takes that out, you could fill the gap from Friday, and you can get to the 79.50s. So I just wanted to go through those. That's the daily. The monthly chart has it has a symmetric triangle formation. I happen to dislike these patterns intensely because by the time they tell you anything, it's already done the move. So if it breaks out to the upside, it has to clear 84.66. That'll say, okay, great, you can retest the previous high of 86.82. But if it takes out, certainly within the next 2 months, if it takes out 72.94, that is very negative. So let's go through the rotation now. I've got Pat on the line, Pattern Framing MS. Hi, Pat, how are you?
I'm good, thank you. I was just wanting to know the entry point for Coke.
And you remember we said don't touch Coke until maybe early this week to see where it would go, because I said I didn't have any positive signs in it, and there was a chance that it could be making a hat-trick top at a peak F top in the weekly, and it might turn out, I don't know yet, in the monthly chart I've got F/B, but it's the daily chart that we were looking at for an entry. I'm going to suggest that you don't buy Coke at this particular point.
Okay.
Not right now. I tell you why. The H pattern that it's making right now, I don't know if you can see my charts on Tiger TV.
Yep.
Okay, I'm going to expand this chart so you can see what I'm looking at. In the ChapmanWave, there's a particular pattern where it goes to, there's the high of peak D, E, or F on the left side. In this case, it's 77.74 on 11th of May. Pulls back and then has a run, and it makes a pattern that I call the ChapmanWave cup and ladle breakout. So we'll talk about that when we get back, and we'll go through Coca-Cola as soon as we return with Pat in Framingham, Massachusetts, where they used to have a GM plant where I took my son as a kid.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of tfnn.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi everyone, Basil Chapman. We're on with patent framing and mass. We're looking at Coca-Cola, which has just been an absolutely stellar performer for forever. I mean, just ever since the low back in 2009, it has just consistently gone peak A, B, C, D, E, and now the question is this brand new leg B or is it old leg F? Well, I'm starting to get signs in the monthly chart that says from the on-balance volume that it's a little toppy right now. That doesn't tell me whether it can pull back to the 9-period moving average of 73.56 and hold on a monthly basis, that is, or whether the weekly chart, which has a rising trend line, if you're looking at my charts, which has a series of higher highs, which makes a beautiful trend line. Remember, these are trend lines which turn into a channel, the little mini channel, which I call the inside track. Well, if Coca-Cola breaks above 80.20, that's very positive action. I have to consider that leg C up in the weekly. But in the meantime, it's been repelled by the red line. And that red line says I've got very clear parameters because on the upside, the support is absolutely at the 75.30 let's call it 75 level.
I see.
So, Pat, I'm going to ask you to have a little patience. I suspect you're going to get it. But why don't you just start a small position between 76.67, between 75. If you had asked me, the most preferential place to put a position on would be at about between 74.20 to 73.50. Why? Because it will have pulled back enough for a breather, and then finally, if you want to treat this as a dividend stock, is that correct?
Correct.
Yeah, that's when I think you will get the best dividend and the risk reward, and then a small position, you can have a wider stop, and as soon, if it goes back to the 77 level, you know you've got yourself a great entry. But that's the way I would treat it. Wait for a little bit more. I think earnings came out today. Wasn't that great? It's disappointing. I'm a little concerned. The reason why I don't say go full hog into it is because this Doji Peak F in the weekly chart has all the symptoms and characteristics of a top that could turn into a more serious one if Coke takes out the low of 74.17 decisively, the low of the week of the 29th of June. If it does that, then it's probably going to test 72.56. And you see, that's why I'm saying to you, if you bought it in the range I just told you, you could have a 3 to 4 point stop, and you can survive some tumultuous times in the market if Coke is perceived as still a good dividend stock, even though the upside might be limited. So that's my recommendation. Have a little patience. Try to get it about, maybe 2 points lower, something like that, 1.5, 2 points lower. You can even give me a call to see. I just don't see it as anything other than a mini trading range with an upside 77.50 to 78.30 maximum right at this point. But the downside starts to get open if it begins to take out by the end of July. If it's taking out 73.56 on a monthly basis, there's a good chance it's making a peak F top. So I'm just a little cautious. You can tell I've never been this cautious, not for a long time anyway. So even dividend stocks can give you better dividends if they keep going down. So I wouldn't jump to get in. I'd rather selectively put in a bid about 1.5, 2 points lower, and a small position. Let's see how that's handled. If it rallies, I might suggest adding. And if it starts to break down, you've got a small position with a small stop. You don't really want any part of it. Because if Coke in August takes out 72 to 70, that 2 point range, 72 to 70, that's just not going to be a good sign at all. So I hope that helps you.
It did a lot. Thank you.
Thank you so much. Folks, stay tuned for Larry Pesavento. As we go out, let me give you my parameters. The volatility index pushes and holds above 20. This market's going even lower. Right now, the parameters to watch are the low of today. Take out the low of today in the next 2 days. That's 12,583 in the Dow. We will be testing 12,530 on the 200-period moving average, probably going lower. Be careful here. Upside is limited to about 12,000.